The other big story from yesterday, of course, the South African Reserve Bank's decision to cut interest rates, bringing some relief to homeowners with hopes that it will also encourage potential buyers. While the immediate impact may be modest, the start of this rate cutting cycle is seen as a positive sign for the property market. But when can we expect this optimism to start bearing fruit? Joining us now is Carlo Mariani. He's a property entrepreneur and founder of Property Coach. Carlo, thanks very much indeed for your time and your patience. Welcome to the SABC News Channel. Really do appreciate it. Few surprises from yesterday.
Good morning, Ayanda.
Yeah, economists yesterday, had predicted that we'd see a 25 basis point cut, some pushing it to 50. The Reserve Bank governor said the MPC's decision was unanimous. But do you reckon it goes far enough to kind of shift the dial in the property market?
Well, I think the interest rates are an important driver of short-term impact on the property market, but we shouldn't sweat interest rates too much. Certainly, yesterday's decision reduces your interest payment on a 1 million rand bond by just slightly in excess of 2,000 rand per annum. And that helps momentum, that helps the mood, and in the short term, the property market is driven by mood and interest rates. But it's also important that we go back to the fundamental long-term drivers of the property market, and those cannot be affected by Reserve Bank Governor Kganyago. Those boils down to important things like population growth, mass urbanization, household formation, rising building costs, economic growth. Those are the fundamentals that we should really pay attention to as investors in the property market, rather than sweating the short term of interest rates going up, going down. I think those people like me that have got enough gray hair, they've seen them going up, they've seen them going down. It's a cycle, and we should just be seen as such.
That's very interesting. I mean, it does help us broaden our thinking around what actually influences whether or not people want to buy or even sell their property. And it makes us think about, for instance, local governance in this country. You know, on a platform like this, we spend a lot of time speaking about whether or not metros, for example, are run well. I imagine the answer to that question has a huge bearing on how the market performs.
Ayanda, you are absolutely right. And I think that my focus as a property investor and as a support and guidance to aspiring growing property investors is to help them choosing the right area. And certainly when it comes to investing, not every area is created equal, and there should be a number of elements to consider. And the quality of the governance is nowadays, in the future, definitely a key driver of the returns that you will be able to achieve as a property investor in South Africa in the foreseeable future.
Yeah. Speaking of those returns, what's your sense of whether or not people are actually, frankly, able to make a profit on their property, at least in the last decade or so? And I'm only quoting off that period because we've seen, things like the pandemic take place, for example, and we've seen a lot of people complaining about, very visible signs of decay depending on where they stay in South Africa.
I think what is critical is that all property investors should focus on buying the right property in the right area at the right price, and then focus on getting the right funding and the right financing. And quoting Bill Gates, we tend to overestimate what's going to happen in the next 2 years and to underestimate what's going to happen in the 10 years. And as a long-term investment, property in South Africa, considering the supply and demand dynamics that we are experiencing, is highly likely to be something that people will be very happy in doing. But if you are planning to get wealthy with property in the next month, that might be not the case.
Fair enough. A month is quite brief. I know you mentioned that the repo rate isn't the sole driver, as it were, of behavior in the market. But what is your advice for anybody who's kind of been watching something like the repo rate for quite some time, has been waiting for a cut, and is considering getting into the market with their first property?
Well, I think when interest rates go down, unfortunately, property prices go up. So a lot of the saving in interest payable on your bond goes to service a higher amount because property prices go up. So just to sit and wait for interest rates to go down further in order to enter the market might not be such a smart strategy as many people think, because there is no doubt that property prices will start to accelerate as a function of improvement in mood, that this first cut in interest rates announced yesterday, better economic growth coming up through many of the good things that are happening. So just to wait, well, rarely is a winning strategy when it comes to property and property investing. And even if you're just buying as an owner-occupier, I would say if you are in a position to get into the property market, well, then you should really consider doing so. Again, as long as you buy the right property in the right area, the right price, then you probably should do it.
That's fascinating. What kind of trends are you seeing around what type of property people are typically going for? And I appreciate this is a very broad question because it depends on where you are in your life, how much you're earning, whether or not you're a retired couple or a family that's starting out. But just from your own kind of trends, which kinds of properties are you finding are actually very easy to let go of and, are being cycled very quickly?
Well, I think that the fundamentals of safety and security will remain critical drivers of property growth and property appreciation. So when you're looking at buying a property and choosing an area to invest in, definitely do your research in terms of the safety and the security of the area and of the property itself. And that's going to go well in terms of finding tenants if you're an investor, of retaining increasing value. And I would say that the other big, massive mega trend that we have is mass urbanization. As much as everybody likes to talk down on Gauteng and Johannesburg in particular, there's still incredible amount of inflow of people coming into the big cities in Gauteng. And that creates demand for the property market and for the rental market. Rents are going up in excess of inflation for the first time in a long time. I do expect that to continue to be the case in the foreseeable future. So I think there are many things that make the prospects of the property market look very bright, and maybe brighter over the last couple of years where it has been a challenge at times.
Carlo Mariani, you've given us a lot to think about, really unique insights. We appreciate your time. Thanks very much indeed for speaking to us. Carlo Mariani is a property entrepreneur and founder of Property Coach, as we take stock of at least one of the effects of the latest repo rate cut.